Good morning, everyone. A warm welcome to all participants to today's webinar. Today, the topic is the food revolution in an inflationary environment. My name is Peter Pilavaki, and I'll be moderating today. I suggest we start. Obviously, the rise of inflation has been a major dominant economic theme lately. It certainly has been exacerbated as well by the current political and geopolitical events. So this is something that we're all experiencing in one way or the other. The theme today is to discuss how inflation will influence the food sector broadly and also the implication from an investment perspective. I'd like to welcome our two guest speakers today here. First, Beatrice Condé-Petit, welcome to you, and Elad Ben-Am. Beatrice will really focus on the link between food inflation, food safety, and take a structural view on how the agri-food system can become more efficient. Her view will be more strategic, more long-term view. Elad, on the other hand, I'd like to say, will look at the current sources of food inflation and will build the bridge to the investment perspective. Therefore, his view will be more tactical, more short-term, if I may say. In terms of format, today we'll have these two presentations from these guest speakers I just mentioned, and it will be followed by a panel discussion. For the panel discussions, please feel free to hand in your questions via the chat function. We'll try to answer all of them, and if we can't answer all of them, we may revert back after the webinar. The webinar will be recorded, and there'll be a replay that we'll make available, obviously. I would now like to introduce Beatrice Condé-Petit for the first presentation. Beatrice Condé-Petit holds a position of Food Science Officer at the Bühler Group. She drives the strategic innovation projects at the interface between science, technology, and business around the world. Beatrice is currently responsible for Bühler's sustainability program with a focus on sustainable food supply, leveraging collaborative innovation with customers, academia, startups, and suppliers. Before joining Bühler in 2008, Beatrice worked at ETH in Zurich for 20 years as a researcher, lecturer, and consultant to the international food industry. Beatrice, may I hand it over to you?
Thank you, Pete, and also a very warm welcome from my side. For those who are in Switzerland, you might be experiencing this very nice spring that we have, but it could be also seen as the very disturbing sign of a drought that is ahead of us. So unfortunately, agriculture is one of the sectors most severely hit by climate change. So we have already going on since many years a disruption in the agricultural production caused by severe weather conditions, drought, or too much water, but also a second critical factor, which is the loss of biodiversity, the loss of nature, so to say. So the massive effects that we are seeing today from the COVID crisis and the ongoing war can be seen just as amplifiers of something which is going on a much, much longer time scale. The effects of climate change and loss of biodiversity can be clearly seen today. For instance, in the last 2 years, severe droughts have affected crops in Brazil, Argentina, mainly soy and maize. But we also see that crops are more contaminated, for instance, by mycotoxins, which are poisonous fungus that grow on these crops. You need to then downgrade the material to feed, or sometimes you lose it completely. But we also have many more parasites, plant pests, diseases affecting the crops. We've seen in 2019, a worm that ate through many of the crops in China. And we foresee that yields will go down. A rather conservative estimate is a yield loss of 6% for wheat. It will depend on the region. Some regions will profit from climate change, but in many many other regions, yield will go down, or we will have more contamination, and overall, we expect to have quite dramatic yield losses. And this will affect people on this planet, mainly in the global south, where we already have those who suffer hunger, over 800 million people who live in regions very much affected by climate change. So one bottleneck that we have in feeding the world, especially if we look at the growing population, is protein. And I have a very simple map of how protein looks. And you can say that 40% of the protein which grows on the field is landing on our plate. Now, what about the rest, the other 60%? So from the 525 million tons of protein that grow in the fields, over 65% go into feeding livestock. And this then lands on our plate, and that's only 15% of protein in the form of meat, eggs, or dairy. Only 25% of protein from plants are consumed directly. So we have big losses from animal conversion. And there is one true bottleneck on this planet, and that is arable land, where we should not aim at an extension of agricultural land, rather even use less land in order to restore nature. But at the same time, we need to feed the growing population and have an adequate protein supply. The two biggest levers are reducing losses, because we still have losses in the order of 1/3 of food which is lost or wasted. And on the other hand, shifting diets towards more plant-based. Now, we could say from our Western, rich and well-nourished perspective, why don't we all go vegan on this world? But this is not realistic. In fact, you have to look at the growth of population, which is in the low and the middle income regions. And these countries will drive growth in meat demand. And this meat demand will be, above all, poultry, which already has a much better conversion than, for instance, beef. So beef will grow less, but also pork. And what is not on this graph is fish from aquaculture. Growth in the Western world will be much smaller, and there are different predictions when we will meet the peak meat here in Europe in the next 5 to 7 years. So this is the reality. Now, how can we make these animal products more sustainable? Because today, the greenhouse gas emissions and the land use come mainly from these animal-based products, meat using a lot of land, and through this also emitting quite a lot of CO2. One interesting approach is to take a circular economy approach, and having in mind that we have great losses of food and side streams and biomass, and use these losses to grow insects. So on the next slide, you see the circular economy approach. These losses occur sometimes very early in the value chain. I've talked about mycotoxin contaminated crops, but also in our Western world, rather at the end of the chain, because we don't manage our kitchens and we throw away food. This unused biomass or unused side streams can be used to grow larvae of insects, for instance, the black soldier fly larvae, or mealworms. And these insects are very effective in extracting the protein. This insect larvae can then be processed into a protein-rich meal, which serves as an interesting feedstock for poultry and fish. These two animal species would also consume insects in their natural environment. Apart from protein, you get a fat-rich fraction and a residue, which is a very interesting fertilizer. So this approach is now really hitting reality, and the first industrial plants exist. Bühler has built a plant, and you will see how it looks like in the Netherlands. It's a very hygienic, very industrial plant to rear the insects. You see them in the green boxes. where they are fed automatically. It's a very controlled environment. And then these larvae are then processed into these different fractions, which is the protein-rich meal, the lipids, and as I said, then the residue is a very interesting fertilizer. Bühler is now building the next big plant in France. So investments were a little bit delayed through the crisis, but we see that at the end, the interest is there to use this upcycling, in fact, of unused biomass to produce an interesting feedstock for animals. Now, the market entry are premium products. And here are 3 examples of products which are on the market. It's pet food, where the margins are highest, and some other premium products, still very niche products. But it's interesting, you can feed salmon without the need of fish meal, which is one of the reasons why salmon is so unsustainable. Also fish poultry, and then have also the story of the healthy chickens through the interesting compounds that come with insects and also sustain the health of the animals. We foresee that this market will become more mature in the next years. We will see a mature market around 2030, and you see it on the next slide, where we expect to see productions around 700 million tons of insect protein. And in this more mature market, this is a product which is interesting to feed livestock, poultry, fish, the growing markets, and with this, a big opportunity to make these food products much more sustainable. Now, this is an approach coming from the supply chain, building on reducing waste, and still consuming the traditional products, which is at the end the meat or milk or egg. You can also look at the demand side. And we can also look at us from the Western world as consumers. How can we enable a change in diets? Many of us have already changed, reduced meat consumption, but how can we win, in fact, the masses so that we can really create an impact? And here you see a market which is exploding in popularity of plant-based alternatives. You might even know some of these products. And it's also a very interesting market opportunity, just because this global meat market is so big, the 1.4 trillion. And if you just take a small slice out of it and supply this market with meat alternatives, that already becomes very interesting. Now, what are these meat alternatives? These are products using protein-rich raw material, where the proteins are textured in the process so that you can mimic, for instance, a chicken meat in terms of texture. Bühler is also a supplier of this technology. It's the extrusion technology, but basically you can say it's not really a new technology because it has been around since the 70s. What is new is obviously now this market, and also the marketing to consumers, a new generation of consumers, but also really large improvements in the texture of these products, in the taste of these products. They become much more attractive, a real culinary experience. And on the other hand, also sustainability always in the focus, looking at new raw materials, new protein-rich raw materials beyond soy. Soy would be the traditional, the mass, the commodity protein. And it's interesting to look at new plant-based ingredients. And at the end of the day, also the way how innovation is done has changed. This is typically today a collaborative innovation leveraging different partnerships. Now, what are the raw materials of the future when we look into these products? We anticipate a growth in 3 waves. Today, we are in this plant-based ingredient market, which is very interesting. So I said soy and other protein-rich crops, which are used for the products today. The next wave will come from microorganisms, where you leverage, for instance, yeast, bacteria, but also microalgae that you cultivate and ferment in tanks to produce protein-rich ingredients, but also other attractive ingredients like lipids or other minor compounds. This is something which is only starting. Today, this market is serving some niche products, like, for instance, the blue colorant that you find in food is typically produced through microalgae. But as these industries and these technologies scale, they will become more interesting. And then really much more further down the road, you could also think of the animal cells cultivated for meat in a way that you produce cultured meat without the need of the whole animal. So these are the three waves that we anticipate. And if we look into the future, and I have a picture of how the crops will look like. Let me first say something around the companies who are playing here. There are obviously many established companies, but also many newcomers who are in this space looking at new ingredients, looking at processing them, the whole research which is around them, all the accelerators, the technology providers. So it's today a very interesting market opportunity, and you as investors might already also know this market. And when we look at the topic of food security in the future and what are the crops which will be around, that's the picture that I wanted to show you. So we will have the established crops that we know today. All the starch-rich crops will still grow on the field, but we will have new crops coming up, as I said, grown in the tank. So the tank becoming the new field, yeast, microalgae, bacteria, and they have the potential to replace up to 20% of the traditional grains, for instance, or raw materials which are used also for livestock feeding. So again, a different angle to contribute to the food security, not only of plant-based food, but also of animal-based food. So at the end of the day, it is about food security in the long run, enabling nourishing 10 billion people by 2050 on this planet, ensuring affordable food, healthy food, and a diversity of diets. Thank you very much for your attention.
Thank you, Beatrice. Very, very interesting to hear your view. Before I pass it to Elad, please allow me to ask one question that'll help the transition. You're describing in your presentation a strategic, structural shift towards a more efficient agri-food system. How is the current spike in food inflation affecting this process from your point of view?
Yeah, so it's interesting that starting already with COVID and the disruption of the supply chain, you see the importance of staples, the basic food. So be it a wheat flour, pasta, rice, etc. And in this sense, this industry, which is sometimes not so much seen, has become more visible and seen as very relevant. If you are in this industry producing flour, or if you are milling rice, for instance, and your costs are 80% of your costs are raw material, obviously you have to do something. So there's where we see also an interest in investments also in making the processes much more efficient. So it's investments also in automation. Also, the digital transition for an industry which is rather a conservative industry is obviously receiving quite a boost, because obviously millers have seen that you can also operate a mill from your iPad sitting on your sofa at home. So it's interesting that something that we were like kind of pushing is now also being pulled. And we see also especially in the global south, you see obviously the need for staples where the population is growing. Investments are more done in terms of food parks. So these are big industrial complexes where you have the different industries together. So from receiving the grain storage, handling, cleaning, flour production, but then also the side streams that go into feed, and also the next step in producing pasta, all on the same site. So these are massive volumes which are processed in there. And you can do that much, much more efficiently because you don't need to transport, you don't need to pack the products. You can directly also use the side streams and with that have a much better overall yield. So these are things which have been triggered by the current crisis that we have and also the inflation.
Thank you, Beatrice. Please stay with us. Of course, we'll need you for the panel in a few minutes. But now I would like to introduce Elad Ben-Am. Elad is the portfolio manager of the Food Revolution and head of fund solutions at Picard Angst. Elad has over 18 years of experience in the Swiss financial industry. He has been investing into the structural shift of the global agri-food system for many years now. And together with his team, he has launched the Picard Angst Food Revolution Fund in April last year. Elad, may I hand it over to you?
Thank you, Pete, and also welcome from my side. In my presentation, I really want to touch kind of to build a bridge from what Beatrice presented and focus mainly on the current inflation, about the social consequences, the sources, what's actually driving the current food inflation that we see, and what are the implications for investors in the food area. I mean, we are currently experiencing, I think, the third, what can be called the third period of a major food inflation in the last 20 years, after 2007 and 8 and 2011-12. And it's interesting to see that we have two peaks, in a short period of time, followed by a pretty deflationary decade, which came to an end in summer 2020. And I think what just looks like a somewhat volatile chart here is actually a phenomenon, influencing millions of people's life. Less so here in the developed world, but very much so in emerging countries. And here we can see why this chart here shows the percentage of available income spent on food by region. And we can see here that while we in the West, we spend around 7 to 12% of our available income on food, this number goes up to 20 to 30% in many developing countries. And these numbers also explain why food inflation can have pretty explosive social consequences. What you can see here on the chart on the right is basically the same chart that we've seen in the previous slide, except that we have added here also food riots and food-related political unrest in different countries. And obviously, it's not really surprising to see that the largest number of food riots around the world have been around the last two food inflation peaks in 2007 and 8 and 2011 and 12, including the Arab Spring. And it's also not surprising to see, renewed emergence of food riots in recent months as we see food inflation spiking. Now let's have a look at inflation. Maybe first from an economic point of view. I mean, there are different types of inflation. Obviously, there's demand-driven inflation, where basically just an overheating demand is pushing prices higher, and there's the so-called supply side or cost push inflation, which is basically what we currently experience. So inflation which has been, triggered by a disruption of the supply side, and this results in a mismatch basically between the amount demanded and the amount that is being produced by the supply side, and eventually results in higher food prices. That's basically the theoretical perspective on what's actually driving inflation. Now, if we look at the main drivers of the current food inflation, I think it's obviously fair to say that there are a number of contributing factors, and most of them also interlinked. So it's not always easy to look at them in isolation, but still, I think we do see three major drivers, which I would like to describe in the coming slides. The three are labor shortage, input cost inflation, as well as freight and supply chain disruption. Let's start with the labor shortage, which, according to the U.S. Chamber of Commerce, is actually the single biggest supply side distraction and the single biggest factor contributing to high food prices. That's actually also something we hear from many of our portfolio companies, because there's simply not enough workers to unload containers in ports. There are not enough truck drivers to move the food to distributors, etc. Now, if we look at this chart here, that's a chart taken from a Barron's article. You can see basically two lines here at the top. The blue line illustrates the total U.S. population, basically determining the demand for labor. And the yellow line is reflecting the U.S. working population, so all people between 16 and 64. And I think you can see here that the growth rates of those two lines moving in waves, and depending on whether the demand or the supply side is growing faster, we're going through a phase of labor shortage or actually labor oversupply, which is what you can see here on the lower part of the chart. So if we take, for example, the period after World War II, we saw an acceleration of the total population, followed by an acceleration of the working population 15, 20 years later, and vice versa. 15 to 20 years after the total population growth has peaked in the late 50s, we saw the peak of the working population 15, 20 years later. And as you can see here, we have actually entered a new phase of labor shortage around 2015 and 16, which, according to this model, should last for the next 20 years. So here we clearly have basically the structural drivers of labor shortage, and on the top of this structural labor shortage, the COVID pandemic has further exacerbated the situation. What you can see here on this slide, you have this pink line, which basically illustrates the retirement trend in the US. So that's basically the development of retirements, how you would expect them to develop given the structural drivers I just described. And then you have here the black line, which is the actual level of retirements in the US. And you can see here a massive acceleration of retirements, of early retirements in summer 2020. And that's a big driver of the current labor shortage we face. And the bad news is also that's not something that's just going to disappear anytime soon, because obviously people that have left the working population, they will most of them will not come back, which means that this exacerbated labor shortage that we're facing is actually here to stay for the time being, and we're going to deal with it for the years to come. So let's look at the second source of food inflation, which are basically the input cost inflation. I don't want to talk too much about the oil price. I think there's enough talk about the oil price and what's driving the oil price. We really want to focus here on the grain prices. What you can see here is the Bloomberg Grains Spot Subindex, which is basically reflecting the price movements of corn, soybeans, and wheat. And I think it's interesting to see here as well what has been driving this development in the last couple of years. It actually started with a pretty deflationary period in 2017-18, driven by the African swine fever, which basically caused a drop of 25% in global pork production, which was then followed by basically China, mainly China, building up again their pig herd, the pig population, and obviously triggering a massive demand for grains. And at the same time, we had almost a perfect storm, because we had the overheating demand on one side, so demand-driven inflation. At the same time, we had a massive dryness, especially in Latin America, as Beatrice also mentioned, and that was basically the main driver behind this price spike that we saw in 2020 to mid 2021. And on top of that, obviously, we had the more recent developments in the Ukraine and Russia, which together amount for around 25% of the global wheat production. And the last one is actually a very important driver of food inflation. Basically, all this term that you hear a lot, supply chain disruptions. It's sometimes not very straightforward to understand what's actually driving it. So it's interesting to dig into that a little bit deeper. What you can see here is the Drewry Hong Kong Los Angeles container rate benchmark, which is basically the price you pay for for 40-foot container load without the terminal handling. And what you can see here is obviously it grew fivefold since summer 2020, which is very much related to the pandemic, to the COVID pandemic we had. if you look at the drivers of it, I mean, one immediate impact was obviously as we went into the first lockdown, many of the shipping companies, they basically gave back their containers. Most of these containers are leased anyway. I mean, keep in mind that 90% of the goods shipped are actually shipped on the sea. So it's a major impact on this channel. At the same actually happened on the vessel side. So many of the operational vessels were basically sent to refurbishment, and this reduction of capacity is still something that we feel today, and is a major driver of this rate hike. At the same time, we also had capacity issues on the ports, simply because there were a lot of absentees in the ports driven by Corona. Obviously, Omicron didn't make things better, so there was simply not enough workers to offload some of these ships. You can also track that Bloomberg. You can see the waiting times of ships in different ports, and you can really see how much stress there is in the system driven by this. And then the last impact to mention here is the change flow of goods. Obviously, as we all went into lockdowns across the globe, there was a massive shift in demands away from services to products, and especially products, obviously technological products that you need for home office, etc. And that also resulted in a situation where many of the shipping capacity was kind of stranded in areas where they're not really helpful. And that's also something that to some extent, yes, will normalize, but it will take quite some time to basically address these sources. So now, after having looked at these social consequences, the sources of food inflation, let's basically ask the question: so, what needs to be done to address food inflation? And I think it's fair to say that one of the main sources, the underlying sources, one of the main causes of food inflation in general, and we heard that also from Beatrice, is actually inefficiency. So the lack of innovation, lack of efficient use of resources is a clear driver of food inflation. This is the quote you see here is from an article from the World Bank. And in a nutshell, they basically describe efficiency improvement, innovation, climate smart techniques as the main tools to fight food inflation. We couldn't agree more. I mean, given the accelerating food inflation and the risk of social unrest it brings, and given the structural character of the current food inflation, we expect to see significant investments into these, as we call them, deflationary techniques. And that basically also brings me to the last part. Basically, if we build a bridge now to the investment side, I think from an investor's perspective, obviously this provides tremendous investment opportunities. We have positioned our Food Revolution portfolio accordingly. We have a strong focus on companies providing deflationary products and solutions. And on this slide, we would like to show you how we build that exposure, again, structured along the three sources that I mentioned before. Looking at labor shortage, there's obviously a growing demand for automation services. There's a significant pent-up demand for these solutions, which is reflected in record high order backlogs of players such as GEA, John Bean, Marel, or Lindsay, but also reducing operating complexity along the food production process is a very powerful instrument to mitigate the effects of labor shortage. And our portfolio company, Kerry, is actually offering, among other things, these kind of solutions. And if we go to the second source, input cost inflation, clearly reducing the use of fertilizers does not only make sense from an ecological and health perspective, but also in times of exploding fertilizer prices, there's a growing need for smart technologies that help reducing the use of these fertilizers. So companies like Deere or ACCO are two examples of companies, offering these technologies. Another example is Ecolab, which offers solutions for efficient water management. And given that 25% of the energy produced globally is used to manage water, the deflationary effect of this technology is obvious, I think. Another way to address input cost inflation is by prolonging shelf life of food products. I mean, that's among other things what Christian Hansen is doing with their enzymes, or by reducing the need for for oil by increasing plastic recycling rates. And here we invested in the Norwegian company Tomra and the French company Carbios. And to close with the third source of food inflation mentioned, freight and supply chain disruption. I mean, if you have soaring freight rates, you better make sure that you ensure the best use of the shipping capacity available. And I don't know if you knew that most of the boxes shipped globally are actually empty for over 55% due to oversized or inefficient packaging. And for example, our portfolio company DS Smith is a company to mention in that regard. So overall, these so-called deflationary companies, these companies that help deflate the current situation, they amount to around 60% of our Food Revolution portfolio. And last point I would like to show you is what we did is we looked back again at the last two inflationary peaks as I showed at the very first slide, and we basically built a portfolio, an equal weighted portfolio of these deflationary companies that already existed back then, and basically had a look how they performed in the last two inflationary phases. And obviously what you can see here is that inflation has been a massive not only earnings driver but also share price driver of these companies. And since we don't see inflation going away anytime soon, we see a lot of structural elements in this inflation. We think that this positioning, having this focus on companies offering, deflationary services, offering more efficiency, more automation, etc., that's actually a place we feel very comfortable to be positioned in. That's all from my side. Thank you.
Thank you, Elad. Very interesting approach with the deflationary solution companies. I'm sure we'll talk a little bit more about it in the panel in a minute. Just before we do that, can you please shed some light, out of the sources of inflations, in your view, which are short-term and which are more structural or more scary from your perspective?
Yeah, I think it's a good question. Personally, I think that most of these sources are actually pretty structural. I mean, if we look at that labor shortage, we discussed the structural element and basically the elements that was added through the pandemic. But even that element is structural because it's not going to go away. If we look at the input cost inflation again, I think Beatrice mentioned many of the structural drivers, and again they're here to stay, and they're here to be addressed not only by us but also by the next generation. So yes, you could argue maybe that the last spike in grain prices was driven by the war, and which hopefully at some point will come to an end. But still, we have massive structural drivers there. And if I look at the last or the third source, the freight, the supply side disruptions, again, yes, it was triggered by an external effect by the pandemic. But it will also take, in our view, a couple of years to normalize again. There, you could argue maybe that it's less structural, but more directly related to external event.
Thank you, Elad. I suggest we now start with the panel discussion. I would just like to remind everyone that you can ask your questions, on the chat. So please feel free. We've got a number already, but please feel free, of course, to add questions. I'm going to try, to direct the question either to Beatrice or Elad, but obviously both feel free to intervene. I guess the first one that I see here, probably for you, Beatrice, is when talking about price of alternative proteins. You talked a lot about proteins in your alternative proteins in your discussion, plant-based or others. They seem pretty expensive, right, versus animal proteins. How do you expect this to develop in the years to come?
Yeah, that's a good point, because at the end of the day, if you want to really use this to feed large populations, the price needs to be there. For the plant-based, obviously the benchmark is soy. It's quite a challenge, because soy is obviously extremely efficient in a sense today, that it is today really from the breeding to the ingredients. It's many aspects are optimized, but the alternatives will be able to meet this in the next years. So they are already close. And when I think of alternatives to plant-based, I'm thinking, for instance, of pulses. So the beans and lentils and chickpeas, so which are which is a market which is very much growing. So you see many, for instance, of the plant-based meat products. The interesting ones are produced using pea protein. So in the coming years, you will see that they come and close to a pair with soy. When it comes then to the microorganisms, this will take longer. So the microorganisms will be first leveraged for highly specialized proteins, which are not necessarily the nutrition proteins, the bulk that you need, but specialized proteins, for instance, for foaming or creating some specific effects where you add small amounts. And they will become interesting already for the mass market, I would say latest in 2030. And the technology will be scaled, and the niche markets to be served are the specialized ingredients. And only with time there will be also a full valorization also of these microorganisms. So at the beginning, I think what we will see is that just some compounds are leveraged, and the rest is maybe used as a standard feed. And in the next, I would say 5 to 10 years, you will see a complete valorization of these new crops, and with that also prices coming down, apart obviously from the scaling element. So we're looking at a horizon between 2-3 years to 2030, where you will see that these different alternative proteins, or I prefer to say more sustainable proteins, will come a pair with the benchmark.
Thank you, Beatrice. Elad, would you like to please interrupt and jump in, of course, if you would like to add anything to that? Else, I can see a question for you that I think will interest a lot of people. Well, your strategy attempts to address the inefficiency of the agri-food business and agri-food system. Is inflation an accelerator? It seems with your deflationary solution, right, that this should be just a positive, but are there risks as well related?
Yes, I think it's a very good point. I mean, obviously our focus, our food revolution focus, is basically at the heart of addressing the inefficiency of the food system, and investing into companies that provide solutions in that context. If there's a question, is inflation per se good for investments in food or bad? I think one really has to differentiate, because I think we talked about kind of the winners of inflation, and clearly they will have massive tailwinds in the years to come. But at the same time, obviously, there are also a lot of losers along the value chain, and losers are clearly the ones that don't have the pricing power, or depend on, as Beatrice said, unsustainable proteins. Companies that basically are really facing the consumer. I mean, we discussed before the political aspect of food inflation. So there's obviously a lot of pushback in increasing prices when it comes to the consumer, while you have much more pricing power if you provide actually solutions that help address some of these inefficiencies. So that's why I think it's very important to differentiate. I wouldn't say inflation per se is good or bad for for investing in food. It's definitely good for for companies in the upstream, midstream part, for companies offering these deflationary services. It's definitely a risk for many companies on the downstream part, especially for companies with limited pricing power. Having said that, we all don't. We all lack the crystal ball. What we do see, obviously, is that we currently have a pretty interesting combination on one hand of a massive acceleration of this process, fueled by this inflation. There's a structural process that is in place, further fueled by inflation. That's one thing which is very positive for our topic. And at the same time, obviously, we're going through a significant multiple contraction period. And I think this combination, this divergence between the fundamental outlook on one hand and the valuation that the market currently offers us, that's in my view a very interesting situation to be in.
Thank you, Elad. So really more positives here than risks, it seems, from your point of view. Beatrice, you spoke, there's a question here that I think is following on what you described before. You spoke about, different types of, protein ingredients beyond soy, right? You spoke about peas, chickpeas, beans, etc. Can you say a word about how you feel, how healthy they are, right? And, I think the background of the question is the transformation process, etc.
Yeah, so obviously that is a point of concern. At the end, it has to be nutritious, and the consumers, for the consumers, that is a key aspect. So in terms of the protein ingredient itself, the plant proteins. So protein is built of amino acids. That is the building block. And there are a few amino acids that we cannot synthesize in our body that we really need to consume through food. If you look at animal-based food, so meat and eggs or these products, usually they have a very, very complete protein quality. They have all the amino acids that you need, and that's why it is also so important that people who suffer from malnutrition also have access to this animal-based food. Egg from time to time, a piece of meat or milk. The plant-based proteins lack one or the other amino acid, and that's why when you are consuming more a plant-rich diet, it's important to combine different protein sources. And traditionally, the different cultures do that. The Indian culture is a good example where you always have, like, for instance, rice and beans combined, so that together they have a very high nutritional value. So basically, through a clever combination, you can achieve a top nutrition value. And that's why it is important also to have a diversity in raw materials. So I think that is also what we will see in future. We are today relying basically on 4 big crops that are nourishing the world. And in future, diversification, also looking at the aspect of increasing biodiversity, will be there. But probably you're also alluding to another aspect, and at the end, the ingredient in the final product, and where the consumer takes the product and reads the label and says, is this healthy or is this not healthy? And sometimes they find a very long list of ingredients and they think, is this good for me? So I would say, basically, these are all ingredients which are absolutely unproblematic. They are released, they have regulatory clearance. So from that point of view, it's no issue. The problem is more the acceptance of consumers for compounds that they don't know. They read methyl cellulose in there, what is this, is this good for me? So I think there we see consumers' acceptance, that especially here in Europe, consumers are quite reluctant. And that's a field for innovation. Clean label products, starting from less refined raw material and ending up with good products. It's a huge field for innovation. So I would not say the products with more compounds are unhealthy. They just have a lower acceptance. And in fact, if there is one compound that we probably all eat too little in the world, except for those who have still very diets cooking themselves and plant-based, is fiber. So that's why also fiber is introduced into this plant-based meat, although in meat you would traditionally not eat fiber. And all of a sudden you can make these meat alternatives also as interesting carrier for compounds that we lack in our diet. It's a field for innovation. It could be, again, a full seminar.
Yeah, thank you very much. Beatrice, I like this optimistic answer. A question I think that should be for both of you. Why haven't meat prices risen as much as input costs? I don't know who wants to go first on that, but I guess that will interest many of us.
Yeah, maybe I think that it might be the two aspects to two answers to that question. First of all, it depends by region. I mean, for example, if you look at Argentina, I mean, in the aftermath of this drought-driven grains inflation that we showed before, actually we saw pretty significant meat price increases, up to 80% at some point. So it depends by region. First of all, second of all, I think what we shouldn't forget is that there are obviously leading and lagging effects, right? What we see here, all these sources of food inflation, including the grains inflation, including the freight rates spiking, and labor shortage becoming worse, etc. These are the leading, right, indicators. This is what we can see now. And food inflation, we see accelerating, but this is clearly lagging. So we would clearly expect actually a lot of the developments that we discussed today to result in higher food inflation as we progress, and meat will be part of that.
Beatrice, is there something you would like to add or to that question?
Just very shortly to add, very often also when we do the comparison, meat, plant-based, we have to consider that we are doing an unfair comparison because we are not paying the true costs of meat. So in that sense, we will also see, if you would link it to the greenhouse gas emissions, that should be even much more expensive. But obviously, there is also a social element on this. You cannot overnight just increase the prices. But I think there, as I agree with Elad, so we see some delay because animals first have to grow, feed has to be produced, etc. So this will still come, but we will see also shifts in this true cost of food. In fact, internalizing externalized costs, but also measures, in fact, of different countries. A lot of things are very distorted also by subsidies.
Thank you. Beatrice, for the insect market, the question is, when do you expect it to become mature and human nutrition? I guess that's something we all have our questions, doubts, convictions.
So if you would like to consume insect protein or products made from insects, you can do it today. You can go and find these products in the shop. But this is really very niche, and you cannot count it really for the big food security. But there are places in the world where people also consume insects, where it's not something which is foreign to them. We think it's a question of acceptance. It's a question of generation. The next generation might be more open to consume insect as ingredient in food products. So that will come. And that's, for instance, when we designed also this technology, we designed it in such a way that the food safety standards are really high. It can go into the human nutrition value chain anytime. So in that sense, it is ready. It is more a question of acceptance. We will probably see first also the lipids of these insects being used, for instance, in the cosmetics industry, because they have very interesting properties, or some other niches. So it will gradually also come into the food chain. And today it's I always say it's only the young generation that want to shock the friends at the apéro in the evening that they come with insects. So it's more of a test that we are doing as a society. So basically, it would be ready, but it's a question of acceptance. And today, the big lever into the big business case, and also to create impact in terms of sustainability, is really replacing traditional soy and maize, which needs a lot of land to grow, by, for instance, insect protein and upcycling waste.
Thank you, Beatrice. I actually have one last question. I'd like Elad to spend as little time as you can on it because we're drawing to an end. But I think your chart about your deflationary solution companies was quite impressive. Can you say a word about timing of investment? Is it a good timing to be long food?
Again, I think I would kind of repeat what I mentioned before. I think long food per se is I wouldn't agree. I would clearly say long these parts of the value chain that obviously help addressing the sources of inefficiency and eventually of the food inflation. And the interesting thing is also if you look at on these companies also from a valuation point of view. I mean that it's you might actually think that some of them are trading at peak multiples, which are crazy. That's actually the opposite is actually the case, simply because many of them are still perceived as pure cyclicals with no structural growth behind. I mean, if I look at this deflationary basket here, for example, we talk about EV/EBITDA multiples of 10 to 12 times next year, 10 times the year after. Basically, what the market tells us is that these are peak earnings that we currently see. And here we would strongly disagree. We don't think these are peak earnings. We actually think we're at the beginning of a structural shift and of a structural cycle. And that's why we consider the current, as I said, the current divergence between valuations on one hand and fundamentals on the other hand as a very interesting opportunity.
Excellent. Well, I guess, this draws our presentation to the end. I'd like to thank all the guests, the speakers, Beatrice, of course, Elad, of course, and all the participants to the webinar. I believe it's been a very interesting discussion, incredibly topical, right? Inflation is certainly on top of everyone's head right now. We'll post, the webinar online and send it after this, so it will be made available to you. If you have any questions, please do feel free to reach out to Beatrice or to Elad and the team. And remains for us to just wish you a very successful day. Thank you, everyone.